Cool.
All right, take two. We just recorded a full episode, which did not go live. So this is our second attempt. And I can see now we've got the red thing on the screen, which is fantastic. That means the world should be seeing this. So welcome along. Here with Gustav Bessinger, the Business Mastery Finance Coach, and myself, Marcus Shaw. And the topic today is numbers. It's all about finance. And so I thought no better person to talk to this than Gustav, who's run his own business successfully in South Africa and also been involved in the accounting finance game for how long now? 10 plus years.
10 plus years, yeah.
10 plus years. So let's start off with, Gustav, what are some of the common problems or challenges that you see small and medium-sized business owners struggling with in terms of their finances?
I think one of the key things is cash flow. That's always something that you get business owners talking about. Not all of them, but a lot of them do struggle with cash flow.
Mm-hmm.
But then I think second to that, that's just as important is business owners don't understand why they have made money or why they haven't made money in certain months. And that's a key thing that I pick up on as well. So they've had a busy month or they've had a good month according to them, but they don't see any money in the bank, right?
Yep.
Or they've had a bad month, but there is money in the bank. So they don't understand necessarily what impacts cash flow and what impacts profit. So they don't understand the numbers.
Yep.
Pretty much. So those would probably be the two key things that we deal with most of the times.
Yeah. Yeah, and I think like we talked about earlier around the first time you get a set of financial accounts and that the continuation of that feeling is pretty common for most business owners where the very first time they get a set of accounts, they're like, what the hell is this? What am I looking at? What is it telling me?
Yep.
Is it good or is it bad? And oftentimes we just don't grow beyond that level of conscious incompetence. And so we're meeting business owners that are 10, 15, 20 years down the track and they still don't truly get it.
Yep.
So yeah, talk to that.
I think the key thing there is to realize if you are only sitting with your accountant once a year and going through your results and you're looking at a profit and loss on a balance sheet and that's the only opportunity that you have to talk about that. You will never understand it.
Yeah.
Right. You will never understand what the makeup of it is, what it means, what it says, and why it's not showing what you think it should be showing. Right. Because you're looking at something and you're not understanding it. As soon as you start looking at it on a monthly basis, right, but also get upskilled on what you are looking at, it will start making more sense, right? You'll start understanding the numbers. And if you understand the numbers, I can guarantee you that you will run a better business. Yeah.
Yeah. And so just specifically around the financial statements, where do you think the confusion mainly is for the average owner?
I think for a lot of guys or a lot of people, it's understanding the difference between overheads and cost of sales, or purchases and operating expenses, if you want to call it that, because it's purchases and cost of sales sort of the same thing, and overheads and operating expenses are the same thing, just different terms. So that's already a problem.
That's
right?
a problem.
Yeah,
The
that's
terms,
a problem. Yeah,
terminology.
The terminology. And I think if you don't understand the difference between the two, then you are in trouble from day dot. Because if you are selling something and you think that it's costing you X to make it, but it's actually costing you X plus Y to make it, you're going to price it wrong, right? So, it's that realization that you need to understand the cost of what you are selling. And a lot of businesses it's not a simple business where we just sell pies, as an example, or even if you sell pies, I'm selling apple pies, cherry pies and peach pies, right? But my margins on those three might be different, right? So if I'm selling an apple pie and I'm making 50% profit on that, I'm selling a peach pie and I'm making 20% on that, what do I want to sell more of?
Yeah.
The apple pies, not the peach pies.
Yeah.
And a lot of business owners don't understand the different profit margins that sits in the different services or products that they are selling. Right. So, and that's a problem, because it means that if you are in a growth mindset and you are purely worried about selling more, you might be selling the 20 margin product and not the 50 margin product. 50% margin product, and you want to be selling the 50% margin product and not the 20% margin product if there's a market for it, right? So
and I think
understanding that and understanding that cost of sales or purchases are purely driven by sales. The more you sell, the more you expect that to be, and the less you sell, the less that should be, because it's driven by sales. Whereas overheads is not driven by sales. Overhead shouldn't go up and down significantly with a change in revenue. Or it shouldn't be driven by revenue. Let's call it that.
So there's this dilemma, I suppose, that owners are faced with, in that the terminology is confusing. You're not doing it you're not looking at it very often. Because it's confusing and you're not looking at it often enough, you're probably not getting the right, the data you're looking at, A, probably not accurate, but B, you don't actually understand necessarily, and to the degree that you need to, where you're actually making your money or where you're not. And so, and I think that raises some other questions around, what should I be, and this is, I think, a question that we deal with often, is like, what should I be measuring? So we'll touch on that later. But if you're a business owner and it's just all a bit like over your head, and you've never quite gotten your head around it, you've never quite gotten into the rhythm of looking at your numbers regularly, or getting your head around what the different statements mean, how to use them, what impact does that have on you as an owner personally?
I think if you don't understand the numbers, you're always going to be a bit confused in terms of what's going on in the business, right? Like, why aren't I making money, or why did I think I was going to make good money this month, but I don't see it in the bank, or those type of things, right? And it can make you despondent, it can make you negative, it can demotivate you. I think one topic that we've discussed as well is clients going to their accountants, and on a yearly basis they get a set of accounts, and the accountant tells you that you did great. You've had a great year, but you don't see any cash sitting in the bank, and but that's not a great year for me. But I guess if you start
on paper,
you've had a great year. And you might actually have had a great year, but there might be some other things that the cash went to that's not sitting in your profit and loss, right? And if you don't understand that, you're going to get despondent, because it might, who knows? You might have paid down $100,000 worth of debt, and that's where it's gone to, right? So, but it doesn't mean that you're going to, hopefully your business isn't in such a big hole that's going to be the case every year. So, I mean, as an example, one of our clients that I sat with, one of our first boardroom clients actually, said exactly the same thing to me. Our turnover is higher, our profits are up, but we don't have any cash. So we're not making money. And I did a bit of a dig in there, and we looked at everything, and it's like, you guys are doing well, but you've paid down $150,000 in debts, and next year there's only half that much that you have to pay back. So cash flow is going to look loads better next year, but you need to understand those type of things. Otherwise, you will get despondent, or you will think that you're not doing well.
It's funny how it can work both ways, right? Like, you could actually be doing okay. I had a discussion with a client that said, we've lost money over this period, and I said, lost profit, or as in on paper, or is your bank account telling you you've lost money, but what's your P&L telling you? Two different things.
Two totally different things.
And so I think sometimes unnecessarily we actually think we're not doing as well as we are.
If you are just measuring the cash in your bank, right,
which is pretty common, right?
And it's good. Cash is king, right? It's really important, right?
You should be looking at that.
If you are only measuring the cash in your bank, and there are loads of other variables that has an impact on your business, and you just make decisions based on that, purely on that, you might make the wrong decisions.
And I think as well, it's interesting how it kind of feeds this cycle of imposter syndrome, right? I'm running this business. I should know how it works. I should be making profit. I should be making cash, and I'm not, or I don't have my head around it. And so you feel like a fraud. And that's something we often hear people talk about, is like, I don't really get it, which I think then contributes to that stagnation and that plateau effect. When you know how your business runs, you understand what customers make you money, how to lead a team, how to increase your average dollar sale, all of these things, you feel empowered and excited to grow your business. And I think that's a subtle shift, is like, if you feel like you're in that just holding pattern, I can almost guarantee it's because you don't understand. You're not measuring your financials, and we'll talk about that later in terms of what to measure. You're not measuring them regularly. You don't have goals or targets around it, and you probably don't have the understanding of what levers to pull, because that's the other thing. If you don't know what levers to pull, you're just the locus of control is external, and you're relying on everyone else to grow your business for you.
Yeah, and I think the key thing to also add to that is if you're in growth mode and you are just chasing sales, but you're chasing the wrong type of sale, i.e. the ones that's not making the margin, you're going to probably get to a stage where you're going to run into trouble, because the bigger you grow the business, the more the overheads become. So if you are chasing the business that's got the low margin, and your base cost is increasing or your average is increasing, you're probably going to start making less money. Yeah. And we've seen that. Me and you both, we've both seen that in businesses, even with clients that we do work with.
And then people start saying crazy stuff like, I want to go back to when it was just me.
Yeah. Yes. Yeah. But that's purely because they haven't put in, that's far past, or that's not, finances is very important, but that's process.
There's other stuff into that.
Process and all sorts of other stuff that comes into that. That's just as important.
But I think the key thing, another key thing around that is if you're serving unprofitable clients, you won't be enjoying that type of work. Your team will not be enjoying serving those types of customers. And so I think another part to this, sort of unseen part of this, is actually the enjoyment levels of the business go up when you are, or down when you don't understand what's going on.
Yes.
And up when you do, and you know what levers to pull, as we talked about.
I think you just generally feel better if you feel more in control, right? And if you feel out of control, you won't.
Yeah. And so let's talk about, what is it that a business owner should be measuring? Like, let's go real practical here, and perhaps just to frame this up a little bit, we're talking about 7 numbers today, and just to make this explicitly clear, these are not the only 7 numbers you could measure in your business, nor the only 7 numbers that you should, but we're just saying these are 7 numbers that are like, there's nothing in here that you could take out. So let's go through the 7 that we measure with our clients on a monthly basis, and then why we measure those particular things.
Yeah. So to start with, is one of the things we do measure, and you can speak more to that, is leads. So how many new clients come across to your business, or will you engage with in your business on a monthly basis and convert them to actually buy from you? Because obviously the more leads you have, the bigger the chances of getting new clients, right? So conversion rate is how many of those leads are you actually converting into paying clients. Again, very important if you want to grow the business. The higher you can get that, the better. And if you measure that, you'll somehow figure out if you're doing right or if you're doing wrong, right? So average dollar sales, another one. We try and motivate our clients to get that as high as possible through upselling and cross-selling, or marketing or promotions, or whatever the case may be. And usually if you can get those 3 things to click, it will translate into revenue. So revenue is one of the figures we measure as well. Second to that, or not second to that, after revenue, we look at your gross profit margin, or the clients look at their gross profit margins. And that's where things become, a bit tricky and a bit scary, I guess, to a lot of clients, because, generally you'll have clients coming in and say that we sell X and we try and make Y, but they don't go into the detail in terms of we are actually selling, as my example before, we are selling 5 different types of pies, and we make 30% on the 5 different types of pies, but they don't go into the detail of the apple pie gives me 50% margin, but the peach pie gives me 20% margin, right? So it's getting people to dig into that and try and establish what they are making for the different types of services or different type of products that they are actually delivering, and understanding the costs that relate to that. And that includes not just stuff that you purchase, but the labor cost as well, right? So then net profit, so that's the costs or operating costs or overheads. And the net profit is stuff that you pay after you've obviously had your sales and you've paid for your purchases or your direct costs. So gross profit or cost of sales is above the line, and net profit is below the line, if you want to call it that. And that's overheads or operating expenses, if you want to call it that, and that's usually what we call, if we can call it, fixed costs, and it's not fixed in terms of it's going to cost you exactly the same each month. There will be things in there like rent and insurance that might be the same, but there will probably be things like subscriptions and repairs and maintenance and telephone and everything else that varies. But we call it fixed, meaning that it doesn't change. It's not impacted by sales. So if sales goes up and sales goes down, it's not going to change with that. That's why we call it fixed. And then the last thing that we measure is times cash on hand, or your cash cover ratio, where we, there's a lot of debate going around how much cash do you need to keep in your business to
especially at the moment.
To plan for slow months or for bad times or for interruption or whatever the case may be. And there are really big entities out there like the Microsofts and the Apples and all those companies that have years worth of cash sitting on their books. But for most small to medium sized entities, there's debate going around. Some people say 6 months, some people say 3 months, and I guess it will depend on your business as well and how capital intensive it is. But generally, we like to try and encourage our clients to have at least 3 months worth of cash sitting there. So 3 months worth of cash to cover fixed expenses.
Yeah. So let's just recap those numbers, because I think if you're listening or watching this, that might have been a lot of information. But we've got leads, conversion rate, average dollar sale, revenue, gross profit margin, net profit margin, and then times cash on hand.
Yes, correct.
Yeah, and I think just to underscore a couple of those points that you made there, for me, the first 3 numbers are all about the quality of the sales and marketing or the performance of the sales and marketing function within the business. So typically with a business, we'll see leads doing this, going up and down, oh, good month, bad month, good month, bad month, that kind of roller coaster effect. And generally what that's a function of is not measuring the leads, but then also secondly not doing consistent marketing activity. And so if we've got consistent marketing activity, well, that should take out a degree of those ups and downs. But then also we want to, and there's this phrase in marketing called always on, and there should be a portion of our marketing that's always on. We never turn it off. And then there should be also sporadic pulses, if you will, of activity based on whether or how our lead flow is. So ideally, we want to create a waiting list of clients, and that lead flow should be similar every month. But
and I think coming in from a finance perspective is things that I always look at is that if I look at marketing spend and people are spending more but they're selling less, there's inefficient spend. So then you need to obviously
spoken like a true accountant.
Then you have to revisit what you
revisit the spend.
Revisit, not necessarily revisit the spend, but
the effectiveness of the spend.
Yes. And should you 100%. Change tact or spend it on something else? I think that's just another thing to add in terms of marketing.
100% agree. And then conversion rate's just about, well, how of those leads we're winning, how well are we doing at converting those leads into work? And if we're not winning work consistently or at the level that we expect, then maybe we need to tighten up our sales process. Maybe we need to do some more training for our sales team. maybe we need a couple more steps in our sales process. Maybe our customers just aren't having the resources or getting the resources they need to make a decision to choose us.
Yeah.
So there's a whole bunch. I mean, that's a whole nother conversation, right? But and then average dollar sale is again about how well it's how effective our marketing is, because our marketing should be pushing those high margin, high average dollar sale products generally, and if we're not getting those, and then that could be the marketing function, or it might also be the sales function. Maybe our sales team are just haven't got our high value products in front of mind when they're selling. And then gross margin, net profit margin. I think you've talked on that, but from my perspective, the gross margin just tells us how well we are selling or delivering rather our core product or service.
Yeah, how efficient.
Yeah,
absolutely.
Yeah,
and that's almost the most important number to understand.
Yeah, agreed.
Right? Because I think the key thing to understand there is that if you understand that number, and you are at a stage where you can grow by 20 or 30% without having a significant impact on your overheads specifically, right? So if you go from 1 million to 1.5 million, but you've got a gross profit margin of 50%, which is like really high, but let's use that as an example, and your average is $100,000, right, for the year. If you can sell an additional 500,000, that 250,000 is just pure net profit. Right, so it's going to make a tremendous difference on your bottom line because it's not impacting your overhead. So important to understand that.
Yeah, and then cash on hand is an interesting one, because I think that's typically something that we're as business owners, we're pretty good at looking at the bank account, but we're not necessarily good at setting a goal around how much cash cover we actually want. And it's been really interesting to see the results that some of our clients have had as a result of having that cash cover there. It's freed them up to make decisions about growing in certain areas or investing in certain areas that they just could never have made if they didn't have that coverage. So I think it's really important to track that, because you will just naturally, if you're focused on that number each month, you'll start trying to improve it.
Yeah, absolutely. I think that's I think it comes to it comes into planning and budgeting and forecasting as well.
Good segue. So let's talk around, like, these are the 7 things that we're saying, hey, if you don't measure anything other than these numbers, like, make sure it's these 7. Talk us through what are some of the skills and practices or rhythms and habits that, if you're in running a business, that you need to develop alongside measuring things like these key numbers. What are some of the...
I think the key thing is to understand what you're looking at, right? So, I mean, you can measure it, but if it's not accurate, then it means nothing, right? So it's making sure that things are coded in your accounting system, be it Xero, MYOB, or whatever you're using, making sure that it's coded correctly. Especially if you are planning to grow your business, right? If you're just a small business owner and you're happy just to plod along, then, I mean, it doesn't really matter, right? So you can do whatever you want and just keep on doing what you're doing. But if you want to grow your business or do better or be more efficient, or, whatever the case may be, make more money, be more profitable, XYZ, whatever, you need to make sure that the data that you're looking at is accurate, right? First of all, and you need to understand what you're looking at. You need to understand the cost of producing a apple pie, and that cost is probably going to be the ingredients that go into that, but it's also going to be electricity, and it's probably going to be some labor putting something together. So your cost isn't just what you purchase, it's other things as well, and the impact that has on your bottom line. I guess second to that is having a plan, having a financial plan, right? Having a budget or having a forecast, having targets to work towards. Because if you don't, it's fine looking at how you are doing and what you've been doing in the past, but you definitely want to have something to work towards, because it's a motivator, right? And I guess what you measure, you manage, and what you manage, you improve. As we always say. So, having a think, and setting targets and building out a budget or a forecast based on those targets. And when I talk about budgets, like short term is what we do first, but the idea is that eventually we'll end up with a 5-year plan.
Yeah.
And it's I think it's a motivator, and it's always nice to know that if you can hit X revenue, this is what the bottom line would look like. But not just that, it helps you to plan to get there. It helps you to put a plan in place so that you know, if I get to 3 million, I'm going to have to increase my team by 10 staff members, and I'm going to need 3 more machines or 2 more vehicles or a bigger premises, or I might need to go to the capital markets and raise capital, or look for bank funding, or whatever the case may be. Because, you can only finance growth out of profits for so long. You're going to get to a stage where you can't do that. Yeah.
So we're saying you must have accurate data if you want to grow.
Yes.
If you want to muddle along, that's another story.
Another story.
But if you want to grow, you need to know that the data you're looking at is accurate. And we talked earlier about my truck and me going to put bigger rubber on it, but actually if I put those bigger tires on, it would affect my speedo, which would then mean if I was driving down the road and my speedo is not accurate, I could get pinged for because I thought I was traveling within the limits of the law, but it turns out I wasn't. And so I think business is the same in terms of, if you think you're looking at data that's telling you one thing, but actually you're not making money on those particular pies or with those particular clients, then you're making decisions that are just not going to be
the right decisions.
The right decisions, chances are. So absolutely accurate data. And then we talked about you need to be planning and thinking forward, and putting in specifically in terms of forecasting growth and getting your head into, okay, what are the choke points or the bottlenecks that might be created if I was to add X onto my top line. And so definitely the plan. And then I think that the third thing that I would add is the rhythm, in terms of you need a rhythm of checking, of stopping whatever that is you do in the day-to-day, and reflecting and reviewing the performance. And we talk about the rear view and the front view, and looking back over the performance that has happened over a given period, but also looking forward in terms of the forecast for the next month and the actions.
Where we want to get to.
Yeah,
absolutely. And I think that's something, without a doubt, I mean, some coaches say you need to do it on a weekly basis or a bi-weekly basis. I think that's a bit hectic. You can probably check your costings on a daily basis if you want to.
Yeah.
It's probably important to do
Depends
that.
on the business, right?
It depends on the business, right? But I think you need to have a finance sit down at least once a month.
Yeah.
You have to review what's happened in the previous month.
And I guess just to touch on that for our business and the clients we work with, it's at least a monthly session, if not twice monthly, with one-on-one with you, and then a board session with 5 other business owners. So I suppose, whether you work with us or not, not the point, but it's about having that regular check-in, whether that's with your accountant or your business partner or your wife or whoever it might be.
And I think the key thing is if you don't have the financial history or the financial skill or experience, it's important to sit with someone that does have it, right?
So, totally agree. There's no point you sitting down and twiddling your thumbs wondering what it is the hell you're
what am I supposed to look at? What am I supposed to discuss?
What are we supposed to talk about? Which is a question we get often, is like,
absolutely.
What should I be looking at?
And
so we've covered that to a degree, but the questions you ask off of what those numbers, I think, is the critical,
that's
the
really
critical
thing.
bit.
And it's amazing if we look at our first boardroom clients, right? The questions that they are now asking after 4 months of being in boardroom versus, what they didn't have any. They didn't know what to ask in the first boardroom. The first month of boardroom.
Yeah, and I love that saying the quality of your questions
Yes.
determines the quality of your results.
Yeah, absolutely. And I mean, even feedback that we've had from clients that's been in the boardroom program where they've pretty much all said they would not want to go back to how they managed the finances before because they didn't really manage it.
Yeah,
and it was like, okay, there's cash in the bank or there's no cash in the bank. Oh shucks, we need to do something about it, right? So, and everybody is saying that they definitely do not want to go back to not measuring and not managing, and not having targets to work towards. Because I mean, second to knowing where you're going, it's also very rewarding if you get to the end of the month and you look at what have I done versus what I wanted to do. And if you've gotten to that or beaten that, it's a really, really satisfying feeling. If you don't, might not be as satisfying, but then at least it gives you the opportunity to dig into the detail to find out why you haven't done that, right? So you'll learn either way. You'll learn either way. You'll learn what not to do, or you'll learn what to do.
Yeah.
Right.
Yeah, I love that.
So yeah, and that's why it's important.
I want to ask two questions just to finish off here. One is, how much time do you think, if let's say you're running a reasonably good business, you've been in business a while, you roughly know what the numbers mean, but you don't fully have your head around it, and you're making some money, but there's some potential in your business. How much time should you be spending on this on a daily, weekly, monthly basis, specifically around this area of finances, if you're an owner?
Yeah, I think if you're an owner, I mean, the thing is, you'll need time to look at what's in front of you and analyzing what's in front of you, right? So if you do that on your own, if you've got the skill, it's going to take you a couple of hours at least a month, right? So for people that join our program, it's a session with myself that you need to invest in, and you'll probably get some homework from that. And that will take you a couple of hours, 3 or 4 hours maybe, depending on what you need to do. And then you need another 3 hours for our monthly boardroom get together, where there's a lot of value to gain as well, because you'll sit with other business owners. You'll all discuss certain key points and pain points and numbers, and you'll get some really cool questions from there and some advice from there if you're open to it. And it's just a win-win. So I would say,
So a couple of hours, just 1 to 2 hours by yourself, analysing the numbers yourself, just so you get your own head around it.
Yeah.
Then there's some homework to do in terms of let me back up one step. Then there's some time that you should be spending, and I think whether it's with us or not, with somebody who understands the numbers better than you do, who you can ask those questions of. And who can, more importantly, ask the questions of you that you maybe not considering.
Yeah, and just to get back on that point, is your accountant, depending on your accountant, they won't understand the numbers as well. They'll have to work with you and pick your brain to really understand the numbers. So it will take time.
Yeah.
This is one thing I wanted to add to that. Yeah.
Yeah. And then there's some time to, like we talked about, getting the data accurate or updating forecasts and spreadsheets, which I think initially is going to be, to get set up, it's going to be a reasonably heavy burden on the owner, but beyond that, it should be maintenance.
Yeah, exactly.
And then, hey, we do the boardroom thing. Maybe you do that or you don't do that, but we're sort of talking 6 to 10 hours a month. Is that in that vicinity?
I would say so, yeah. Because I think the key thing there is to remember that if you do a monthly review, typically what I like to do, and it differs from individual to individual or from finance person to finance person, but I like having a look at how was my current month, how was last month, how did they vary and why. What did I do for the same period last year? Again, why do they vary? How do they vary and why? And looking at the year-to-date numbers as well. So it's a monthly as well as year-to-date review. And then also looking at, this is what I budgeted and this is what I got to. Yearly and monthly as well.
I love that question, Keith.
So yeah, there's a lot to look at, but it's important.
Keith Cunningham has that question, like, a good month, is it a good month or a bad month? Well, it depends what you compare it to.
Yeah.
Compared to what?
Yes.
Well, compared to last month or last year or budget forecast. So yeah, totally agree with that. And then if you are investing that time in, because I'm imagining there's some people that go, shit, that's a lot of time each month. Maybe they're doing, 1 hour a month looking at their bank statement or trying to make sense of zero, and they're going, man, that's a lot of time. What's the benefit if you do this? Like, what's the benefit on in terms of the business and for the owner personally if they are to invest that time in
I think
in developing those skills?
Yeah, I mean, obviously, if you understand the finances, you know what to go after to make it grow. To improve profits or to target different products that you want to sell, or look at different services or fine tune the services. Looking at a services business, measuring productivity of the people that work for you, right? If you understand that side of the business and you understand that for you to enable you to get to X profit, you need to have your people working at 80% productivity, although efficiency comes into that as well. But anyway, to be efficient and productive, you will better understand where you need to go to get what you want out of the business from a monetary perspective. If you don't understand that, it's going to be, which way is the wind blowing? And that's going to dictate how I'm going to do as a business, or how my business is going to do. If you know and understand the numbers, it's much easier to plan. And
it's easier to plan your action
and to go after something.
Yeah, it's a good point. I like that, and I think it's all the feeling that I get when I talk to owners often is that they feel like their success is based on the market or everyone else. It's like the locus of control is with everyone else, and if everyone else plays ball, my team and the customers and the market play ball, well then I'll have a good year. And when you, on the flip side of that, when you understand the drivers of your business and you understand how your marketing investment is affecting your pipeline, and how your sales process is affecting the conversion rate, and where the money's coming from, which clients are great clients and which ones suck, and you understand all of this, and you've got forecasts in place, and all of a sudden that locus of control comes back to within you, and you feel clear and confident about how to grow your business. And I think if more owners felt that clarity and confidence, we'd all be living in a much better society.
I totally agree.
So great stuff. Great stuff. Cool. Well, that's a wrap from us. We've enjoyed spending the time with you. Hopefully you found it valuable. If you do want help with this stuff, this is what we do on the daily, and we love it. So if you're a business owner and you're open-minded and you take action, you do the work that's necessary, and you're growth orientated, you want to grow your business, then we'd love to have a chat with you. I'll put in the comment section a link where you can book a call with myself, and we'll talk about how to grow your business, the things that you need to work on, and help you get clarity on that. So book a call in the link below, and until next time, ka kite anō. Bye for now.
Cheers.